Hey everybody, welcome to the morning market briefing. It's Tuesday, May 19th, 2026. Got Ben Nye here, Tom Russell, I'm Andrew Hall. Super producer Hicks here, the A-team in action. Lots to get to. Let's jump in with Trump posting a truth. Hicks, I think we have this as a graphic if you want to throw it up for those who are on the YouTube. Those who are doing the right thing and subscribing, he basically said, hey, we're getting close to a deal. Everybody has said, hey, hold up. Give us a couple more days. And, we'd like to not continue the bombing, which we've had a pause on, but we still might. And we had a plan, and we were ready to deploy it. Ben, how is this different than 3 weeks ago and, the threat to destroy civilization? And no, never mind, we're almost to a deal.
I mean, I think this one, we kind of got the threat in the never mind truth, which was a little bit, it was like, oh, well, we were going to do this, but just kidding. No, we're not. So I don't know. I don't know how much of it was real or how, if we were ever going to do anything on what changed, if anything. But, so that happened yesterday. So, but he did also say 2 to 3 days, and hopefully we can get a deal without bombing. He went on to talk about Trump RX yesterday in a press conference as well. And we can talk a little bit about that also, but he was asked about this tweet, and he basically said, not much additional, but that people were ready to go. So whether or not they were, I don't know, but if you just take him at his word, then we've postponed it for another couple days.
It's strange to me just because for the last 8 or 9 weeks, we've talked ad nauseum and many times and many forms about the deep-seated mistrust between both parties, between Iran and the United States. We've discussed the merits of those things. It's weird to me that the deal is kind of the scapegoat here at this point to avoid future military action. And yet, at least speaking for myself, I don't know if you would agree, Tom or Ben, but if there were a deal, I'd be like, okay. Do I expect it to be upheld by the other side? Not necessarily.
No. In fact, that there's doctrinal there's a number of different types of jihad. This is something I've learned from my self-study over the last few weeks, but there's basically, by doctrine, you can enter into any agreement with someone who is non-Muslim, and carte blanche, you can renege on that until you are at any point in time, because you can't technically make a deal with people who are not in the tribe. And so the whole idea is like, you can basically do whatever you want, lie, cheat, steal, as long as you're doing it to people who are also not Muslim. And so I think that needs to be taken into consideration. I mean, certainly compared to all of the previous contracts that have been signed, all of the different deals that have been done. But there's basically a doctrinal precedent that says you can sign any deal you want as long as it protects you to the point where you can get to a stronger position and then renege on that deal. So I think that's worth considering that is there's no separation of church and state in Iran. And so if that's a doctrinal feature of the church and the state, then what's the point of signing a deal anyway?
Yeah.
That might be controversial, but that is true. I mean, you can look it up.
Yeah. To that end, if I play the other side of the table, if I'm Iran, it's like, yeah, sure, I'll sign whatever deal.
Yeah.
Trump, you mentioned Trump RX press conference was late afternoon yesterday. 600 more drugs coming onto Trump RX. Mark Cuban playing a role in trying to get these into more people's hands, and the founder of Airbnb building out the website. So bringing out the big guns.
It was interesting. I mean, it looks like a slick website you can go on. They have maps, so you can see which pharmacy has the cheapest drug price near you. You can search for the medication, and you can even say what are some generic alternatives for it. So
they need to overlay it with Airbnb. I'm going to go here for a weekend and get the cheapest drugs.
It was is interesting, and I think it's probably something that's good and worth. And it should help promote pricing competition in the pharmaceutical industry, which can't be a bad thing, I don't think.
Yeah.
It was interesting that Mark Cuban was there.
I mean, he's been on this for a decade now, which is interesting because he's sort of walked back how bad he thought Trump was going to be. Though he did notably, I don't know, have you guys caught this, but he got into a long argument with Palmer Luckey from Anduril yesterday about whether or not we should tax tokens on AI and use that to accumulate some sort of sovereign wealth fund, I guess, or pay for the data centers. It's hard to determine exactly what the tax is for, but it's pretty heated. It went on for hours. They were tweeting back and forth at each other.
I'll have to catch up on that.
And Palmer Luckey is the anti-Cuban, I would say.
Yeah,
there could be no one less like Mark Cuban than Palmer Luckey.
I mean, one of the things that continues to surprise me about Trump is some of the unlikely bedfellows he makes. You know, to be able to get a guy like Cuban involved. Yeah, that fellow. So it's interesting to see how that just continues to evolve. I feel like every 3 or 4 months there's someone involved in some Trump initiative, and I'm pretty shocked to see them involved. Ben, how closely are you watching Ebola?
I'm not watching it very closely, but the administration says they're watching it very closely. The CDC is, and there wasn't one American in Uganda who got flown to Germany who has tested positive, and he's being treated. But right now there's no cases in the U.S., and they don't see it as an imminent threat.
Financial Times reporting that Xi in the summit last week told Trump that Putin might end up regretting his invasion of Ukraine, an interesting departure from what was at least publicly perceived as a very strong alliance, and also a comment that seems a little bit hard to really pin down and validate.
Yeah, I don't really believe it. The FT, you'd think if this was actually a story that came out of the conference that it would have been reported before now. The FT cites people familiar with the U.S. assessment of the summit. There are a lot of people familiar with the U.S. assessment of the summit. I've read the readout of the U.S. assessment of the summit.
It's not.
I don't know why people are thinking this. Maybe it's happened. Xi declined to comment. Trump declined to comment. So, but maybe things are a little bit tighter there. That Putin made a mistake.
Nevertheless, she persisted.
We'll see tomorrow because Putin's visiting China.
Yeah, we'll see what comes from that. Google and Blackstone partnering up. They're creating their own AI cloud firm using in-house chiefs trying to compete with the likes of CoreWeave. Blackstone's going to be the majority owner. They put up $5 billion in equity capital. The entire investment, about $25 billion. So you can look at the follow the money and figure out where's the other 20 coming from.
2 words, initials P and C.
We talking private credit, folks. We're back. So private credit, really the leader on this, but the goal is to just get competitive, use their own stuff. At what point are Blackstone private credit investors saying, let's maybe not? Apparently not yet.
Not yet, and there's still a lot of dry powder here, and Blackstone wants to deploy it. I continue to be a little bit in disbelief about some of these AI cloud providers who are buying a lot of these chips and then leasing them out, because I do think that there's a huge unanswered question on the accounting side, and that relates to the useful life of these chips. With the innovation that's happening, is the useful life really 10 years or is it more like 10 months? And if it's 10 months, then it's one thing if you're investing CapEx, then you're going to continue. If you build a house and you can rent it out for 10 years. If you build a house and then 10 months later,
hey, we can rent it out for the World Cup.
Yep. And then build a new one.
Yeah.
It's not a good business strategy.
Let's talk earnings a little bit. Home Depot coming in. Stock is basically flat, and they did reiterate guidance despite a very, very soft quarter. Ben, was it 2 quarters ago that they gave kind of the dual path of guidance? Where would you assess where they are and where they think they're going? Obviously, if things were bad and they think they can still hit guidance, they think things will improve.
Yeah, and that's kind of what they're alluding to here. I think a lot of it's kind of self-help, but a lot of it just is not going to be much of improvement. They comped down 1% this quarter. They expect 0 to 2%, or excuse me, they comped up like 0.6%. They expect 0 to 2% comp growth for the full year. They should get some margin improvement because they anniversary some of their acquisitions from last year. So there is some self-help that can go on at Home Depot, but there's nothing really that gets people excited, and there's nothing really that got management excited. Their comments on the press release, their conference call will be at 9, but their comments so far said, our first quarter results were in line with our expectations. The underlying demand in our business was relatively similar to what we saw throughout fiscal 25, despite greater consumer uncertainty and housing affordability pressure. So nothing good there other than it's
we
not
thought
worse
this
than
was
20.
coming. Yeah, we knew we were going to lose this game. We're glad that we covered the spread. Meta laying off folks, Tom. Another 8,000 getting the boot.
Well, I would expect that the jobs number is going to show huge gains. I mean, I've been thinking about it a lot. Obviously the rate situation continues to erode. The 10 years now over 460. The 20 year is ticking up towards a 520, and we've got the auction coming up, so we'll see how that goes. But we're seeing almost a worldwide inflation panic, and the ultimate argument now is that the Fed needs to raise rates. That's what everyone's talking about. They're like, we've moved into they've got to raise rates to get inflation down. But the more I think about it, the more we are in a much more restrictive environment now than we were even a week ago. I mean, the 10 years up massively, 25 basis points in a very short period of time.
I saw Brian Westbury tweeting about that as well.
Yeah, the 2 year has gone up as well. I mean, these are your two fulcrum points for borrowing in the U.S. And so suddenly we've basically functionally raised rates. The market has raised rates on itself. And that makes sense. We've seen inflation tick up. The numbers are starting to increase, particularly around oil. And so the real thing I think about is, do we need to actually lower rates? And I know I've reserved the right to be wrong on this, but I think that the jobs picture is fuzzy at best. We're seeing huge companies announce huge layoffs all the time. We're cutting government workers. And yet somehow, some way, these Bureau of Labor Statistics numbers still come out like there's just a rosy picture in the environment. And both the ISM manufacturing services showed contraction in the labor market on both sides of the economy, and yet somehow, some way, we're gaining a couple 100,000 jobs a month. I don't see that picture as reality, and we become more restrictive. The housing market is getting worse. Prices are getting lower. Interest rates are getting higher. The affordability is getting worse every day, and the inventory numbers continue to tick up on available homes for sale, and no one can buy them. And
wait till all these contingent offers fall through, because people who thought they were getting 575 are now going to be in the market for a 7% mortgage.
Yeah, and so it's all leaning in my mind that we're actually going to get more cuts, not less. And I think that the sooner that we can get in front of that, and
we got to convince the market of that.
Convince people that they're thinking on a first level basis. I was listening to a podcast yesterday that I thought had a really good illustration about it was about bond trading, building portfolios right now. But I think it actually, in terms of if you're with the Fed and you work for the Fed, you should be planning for what's going to happen and not what's happening. And the illustration was, I know we have a lot of F1 fans that listen to the podcast. We have a number of super users who have emailed back and forth about it. But if you have the fastest lap on lap 3, that doesn't mean anything, because anything could happen. I mean, the war in Iran there's a crash. A number of people have spun out. There's debris all over the track. How do we be planning now for the end of the race? And in a bond portfolio, that might be 10 years from now. In a normal portfolio, that might be, what trades are we making right now in equities? But in the function of the Fed, this is what we're seeing. We're seeing our tires start to erode, and we need to change the tires. Use that as an example for rate cuts. And everybody's seeing blowouts, and yet, you're calling into your race manager, and they're like, hey, no, tires look good. You're like, I don't know, there's something wrong with my brakes. They're like, nope, we don't see anything here. We actually are seeing better brakes than ever, And so, you kind of have to be like, I got to make a call here. I need to manage this situation in real time so that I can get to the end of the race and not just be constantly commenting on what's happening in real time. And you're like, but I'm having the fastest lap. And and that doesn't matter, because you can finish in last and still have the fastest lap.
And specifically on the employment picture, I feel like we've had some growth on the show, and I want to add a little bit of context on two things really quickly. One, when we talk about the Bureau of Labor Statistics, I don't view that as political discourse whatsoever. It's economic discourse. We have the same lack of confidence in those numbers that are coming in that we did during the previous administration. We are equally unconfident in those numbers that are coming out.
I'm very confident that they are incorrect.
Yes. Put the other way, we know they're wrong. So that's one piece. The other piece is at the beginning of this year, we talked before the war. We talked, and a major theme for us, and when we thought about the Fed's positioning, was when are we going to shift priorities away from inflation in the dual mandate and towards full employment? And a logical, but still perhaps incorrect outcome is that the focus has further re-entrenched solely on inflation. And that's the only thing the market is looking at. And when you don't have a true countervailing force on the employment picture that's accurate, I don't know where you're supposed to point them to. It's a frustration of mine, but it's not like I have a number. I have all these anecdotal pieces of data like we just got from Meta, but it's hard to counterweigh that because we are getting data on inflation. And even though we would maybe argue that PPI is at a high and it's going to remain elevated until the war's over and then for a couple more months, even though we may not think that that is a long-term trend, we do view that as actual transitory inflation. There's at least data there. And the employment picture, it continually blows my mind that we don't have good data on this.
I mean, we do. We get it from all these companies.
Right.
I mean, pick your company. Every single one we talked about over the last few weeks is they're downsizing, they're eliminating middle management. Talk to the people that you interact with on your daily basis. People are getting killed out there. And people who are highly educated. We're talking MBAs, people, director level people are all getting whacked. And that's what we need to be focused on is like, here are real companies who are revealing real information about their business, not a bunch of bureaucrats who haven't been able to get the number right in 8 years.
Tom, I'm curious your thoughts on this, and this is not a shot against you as a bond trader, but do you think for my entire career we've talked about bonds as the smart money? Recently, over the last, really since the inflation scare, I feel like the bond market or people who are, in that world, we've seen it. We saw it. We talked about it last year. Very jittery. Are bonds still the smart money, or is especially now that the equity market's broadening out, does that give us a better picture of where the economy is? I'm just curious your thoughts because we haven't really discussed that.
I think it's actually twofold. I think there's one, the amount of people who know how to trade bonds and have experience trading bonds are gone. All those guys are 20 years older than me. I was the last person to work on a real bond desk, I feel like. And Citi, notably closed their bond desk in 2021 ahead of what could be the biggest money-making opportunity for any bond desk in history in the next 5 years. We just zero interest rate and policy killed the bond market. It killed anyone. There's a brain drain. And then the second piece is the number of people who trade in options on rates. That has exploded. You talk about it all the time, like, you see Michael Burry, he's shorting the 10-year, he's shorting the 30-year, he's doing this, he's doing that. You hear a lot of that talk, but you don't really hear from a lot of people who actually are building portfolios.
They're macro tourists.
Yeah, exactly. Mm-hmm. Yeah, and so you're making big bets which move the markets, but are not part of portfolio trading, which is really more of a picture painting, or I always use the example of growing a pine tree forest. It's a 30-year process that involves pruning at different times, harvesting the pine needles. It's a whole process of building a portfolio, and I don't think there are a lot of people who do that anymore. And a lot of people who are trying to buy stuff, hold it, make a market, and sell it. And that's, those people are getting crushed right now because rates are moving every day. You can't even hold bonds overnight and hope that they would maintain enough value that you could sell them for a profit. And so what do you have to do? Well, you've got to hedge that with options, and so that begets more option trading on the bond market. I think those are really the two pieces. But we talked about relative value yesterday. We've now moved so much in the last 4 or 5 days that long bonds are still an exceptional opportunity. We're now in a position where the belly of the curve is an exceptional opportunity. We were very steep to start the year. We were at a we got down to 3.99 on the 10-year, and we were still close to 5 on the 30-year. 30-year was more opportunistic. Now you got a 460 on the 10-year. That means stuff that trades on a spread to the 10-year is now well over 5. We're going to start buying some of those, sort of mid-range investment grade corporates, because now they've gone from trading at 450 to now 525, 530. It's like, all right, well, I'll take 5 for 10 years too. I'll take it for 30 years. I'll take it for 10 years. I'll take some 2-year treasuries at a little bit of a spread over 4. Now you've got a portfolio where everything is making money and there's value everywhere. I mean, really, short munis is the only spot I'm really seeing where it's not, all that ideal. But like agencies are back on the table, mortgages are super back on the table, and so you can start to build all these different pieces where now you've got diversification of duration, diversification of structure, diversification of credit, and you can start building these bulletproof portfolios that might be volatile for the next couple laps of this race. But over a 2.5 hour race where you're doing 90 laps, suddenly all of those are going to be beneficial, and you're going to pick up a second every lap, and suddenly you start moving towards the front. I think that's a great metaphor.
Yeah, I like that a lot.
Portfolio.
ADI making a deal. They do report earnings tomorrow. In the interest of time, just we're running a little long today. We'll push that back, but they're making a $1.5 billion acquisition. So more on that to come tomorrow. You guys have a great day. We'll talk to you soon.